Let's first start off with the streaming additions, and I know that Netflix wants to sort of guide our eyes away from focusing on those numbers, but this was a pretty strong quarter in terms of net adds, and I'm wondering what you think drove that.
Mostly password sharing restrictions. They've been tapped out in the US market and in several other markets like Western Europe in driving new subscribers because they already have such a large user base. But now that they're kicking freeloaders off and making them pay for their own plans, they're getting these bumps each quarter where they're getting the people who used to use their parents' or friends' plans to pay for their own.
I'm curious as to how much further that takes them. So is this sort of a one-off where we see this big jump this quarter, but we should not expect to see something similar in the next couple of quarters?
I don't think it's a one-off, but I also don't think you're going to continue to get gains from this 3 years down the line. You probably got 1, 2, maybe 2 or 3 more quarters where this will happen. So I think next quarter you're still going to see some gains from this, but they can't continually rely on the password sharing to bump subscriber numbers.
Yeah, at some point it's going to peter out and just become part of the overall picture. One thing, of course, that investors are also responding to is Netflix raising prices for some customers in the US, UK, and France. We've seen other streaming services do this, and there's a bit of like inflation fatigue among consumers with all their different streaming packages. How much pricing power does Netflix really have when it feels like everyone else has already done this and they're kind of late to the party?
I think they could go up a few more dollars still because these price increases are pretty small. It's usually $1 or $2. If you look at linear television, people are paying over $100 a month. It's not unusual for the sports services like ESPN or the regional sports networks to bump their own fees up a few bucks, so the total cable package could go up $15 in the course of a year. So, if you're going from $14 to $15, I don't think that's a huge deal. I think they could still spread it out a little bit more, but I can't foresee them exceeding like $5 price increases over the next few years.
They have to tread very carefully.
Yeah, they have to do it incrementally.
So every analyst note that I've looked at cites the intensifying competition, the landscape out there. Do you see the linear TV ecosystem winning back subscribers? At some point, people are going to say this a la carte thing does not work. I'd rather just pay one big $150 cable bill. Romaine is laughing because we complain about this all the time. Yeah.
I don't think the pay TV is coming back. The cord cutting is just going to continue to happen, despite how expensive the streaming services are becoming. People are just so used to using streaming now that's going to be what the future is for these entertainment companies.
I am curious about when we talk about content, right? Because at the end of the day, what made Netflix so relevant was just the breadth of content. Not always good, but there was a lot always there.
Yeah.
And we know that they've pulled back. Even before the writers and actors strike, we know they were kind of reassessing the spend on certain content. And now when you're in a situation where you're saying you can't share passwords, you have to do all this, does that make the value proposition greater, or I'm sorry, less for consumers if that content isn't there?
Well, Netflix probably won't be as great of a value for consumers as it used to be, but I think Netflix peaked 10 years ago for consumers. If you go back to like 2010, 2011-ish, Netflix had almost all the content that's on Max and Hulu and all these other services because they weren't around, and it was like $6. So the value of it is only getting worse, and that's because you're paying for the true price of the service finally.
Right.
They operated at a loss like so many tech companies do for like a dozen years so they can get you habituated and accustomed to using it and hooked on it.
Right.
But it's I know it sounds kind of dire, but I don't think its proposition as like being a cost-effective all-in-one entertainment company is going to improve. Every one of these services is probably going to get worse for consumers because they're paying more and it's getting more expensive to license and produce content. That's part of what these strikes are about.
Right.
So they're becoming more restrictive on what they can put on their services.
I know this may be kind of a wild question, but is there an opportunity for consolidation? I'm talking among the bigger players.
Somewhat.
Yeah.
Max is already a consolidated of the Warner Brothers Discovery. That used to be 2 different companies. I don't know if I see Netflix like gobbling up, Hulu or Paramount Plus, but not every one of these streaming services will survive.